Hey everyone, Karan here from Life Accounting, where we help you save on taxes and increase your wealth. And in this video, you will learn how payroll taxes work in the United States. We've helped hundreds of business owners with their accounting and taxes, and payroll taxes is just one of those things that many still don't fully understand. Look, it doesn't matter if you have 1 employee, 10 employees, 50 employees, or haven't even started your business yet. You are going to want to watch this video in its entirety. My promise to you is that any question you have about payroll taxes will be answered, and the high-level details you need to know about payroll taxes will be shared. So let's dive in. Okay, first, at a high level, you need to know that there are 3 categories of payroll taxes. Taxes that the employees pay, taxes that the employer pays, and then taxes that both the employee and the employer pay. Employees are responsible for paying their own federal income tax and state income taxes. Employers are responsible for paying their own federal unemployment tax and state unemployment tax. Then both employer and employee pay taxes towards Social Security and Medicare. The big difference is that employees pay income tax at the state and federal level, and employers pay unemployment tax at the state and federal level. Here's a quick breakdown of who pays what and how much. Okay, let's discuss each type of tax, starting with Social Security and Medicare. Employers and employees each pay a 7.65% tax under the Federal Insurance Contributions Act, also known as FICA. This is a required tax obligation for both the employee and the employer that is used to pay Social Security and Medicare in the United States. It is also calculated using the employee's gross wages. For 2022, 6.2% of salaries goes towards Social Security, which applies to the first $147,000 in earnings, and then 1.5% goes to Medicare. When you add those together, FICA taxes amount to 7.65% in total. Note that there is an additional withholding requirement for Medicare taxes when an employee's wage exceeds $200,000. Yes, when an employee's pay surpasses $200,000, the employer is required to deduct an additional amount to cover the increased Medicare tax. This tax is 0.9% of earned income above a certain level, and that level is $250,000 for joint filers, $200,000 for single filers, and then $125,000 for married taxpayers filing separately. The employee is completely responsible for paying this tax. The employer's role is just limited to withholding it. But regardless of the employee's marital or tax filing status, the $200,000 withholding threshold applies. Next, there is federal unemployment taxes. FUTA taxes, unlike FICA taxes, are paid only by the employer to help the federal government assist states with their unemployment programs. The FUTA tax is a 6% tax on the first $7,000 in earnings paid to each employee. Note that employers are required to withhold state and federal income taxes from their employees' earnings, as well as Social Security and Medicare taxes. There are also state unemployment taxes to consider. State unemployment taxes are referred to as SUTA taxes, and SUTA taxes is exclusively paid on behalf of each employee by the employer. SUTA contributes to the funding of unemployment insurance, which is used to help those who have lost their job. State withholding taxes, if applicable, are calculated using the employee's W-4 information, but there is also an employer share. Employers must withhold state and federal income taxes from their employees' wages as required by law. Okay, now that we know who pays what, let's discuss how to pay your payroll taxes. Once you withheld the proper amount of federal, FICA, and Medicare taxes, you will need to calculate your portion in FICA, Medicare, and SUTA taxes. Then pay these amounts to the appropriate agencies. That's either monthly or semi-weekly, depending on the size of your company. Now, for federal taxes, payment must be made electronically through the Electronic Federal Tax Payment System, also known as the EFTPS. This method is completely free. Now, if we're talking about state taxes, the method of paying varies from state to state. So check with your particular state's preferred method. You report your payroll taxes on Form 941 quarterly. For FUTA taxes, you report these amounts on Form 940 annually. I would suggest using a payroll provider such as QuickBooks Payroll to help stay on top of these payments. Okay, what about independent contractors or the self-employed? Well, independent contractors are not considered employees. Employers do not pay any payroll taxes on independent contractors that they hire. But be sure that the person or people you claim to be an independent contractor are actually classified as an independent contractor. According to the IRS, an individual is an independent contractor if the payer has the right to control or direct only the result of the work and not what will be done or how it will be done. Additionally, independent contractors or those who are self-employed are responsible to pay self-employment tax on their net earnings from self-employment. This tax is essentially the employee and employer share of FICA. Now, as a bonus, let's talk about compensation. A ton of businesses get caught off guard when predicting payroll taxes because they forget to include all forms of compensation. Karan, I paid the employee $50,000. What could I possibly be getting wrong? Well, total compensation isn't just salary. Employee compensation includes the following: wages, salaries, commissions, bonuses, and overtime pay. All things considered gross pay and consequently items you have to pay taxes on. So that's payroll taxes at a very high level. As a recap, we learned that employees pay taxes towards federal income tax and state income tax. Employers pay taxes toward federal unemployment tax and state unemployment tax. And then both employer and employee pay taxes towards Social Security and Medicare. Then we learned that federal tax payments must be made electronically through the Electronic Federal Tax Payment System, or EFTPS, which is free to do so. For state taxes, the method of paying varies from state to state, so you need to check with your particular state's preferred method. Next, we learned that employers do not have to pay payroll taxes on independent contractors, but independent contractors and the self-employed do have to pay self-employment taxes. And lastly, we learned that total taxable compensation includes all wages, salaries, commissions, bonuses, and overtime pay. I'm going to place a few videos on the screen I think you should watch next. Be sure to check them out. Also, if you found this video helpful, do me a favor and hit that like button for me. It helps others to find this video on YouTube. And subscribe to the channel for more information that helps you save on taxes and build your wealth. I'm Karan from Life Accounting, and I'll see you in the next video.